Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And just 2 minutes away from the end of the trading day, Caroline Hyde, Taylor Riggs and Shonali Bassett counting you down to the closing bell. Here to help us take us beyond the bell with a global simulcast. Carol Massa, Katie Greifeld, bringing together our Bloomberg TV, radio and YouTube audiences to really pass what has been a day of, well, focus once again on the variant, focus on Omicron, but not panicking, as President Biden says, and the market goes higher.
Yeah, exactly. Risk trade is definitely on this Tuesday. I've been watching chips and trips. I mean, the Philadelphia Semiconductors Index is up about 3.3%. The S&P Super Composite Hotels, Restaurant, and Leisure Industry, so all things hospitality, is up almost 3.9%. Katie, you're definitely seeing like you can kind of go anywhere in this market and find some gains.
Absolutely. The breadth is pretty amazing. I want to point out tech in particular. If you look at the NASDAQ 100, up 2.3% at this moment. And I was just counting, I think that's the 12th day that it has moved more than 1% in either direction just this month alone. So we've seen a lot of volatility, and at least today it's a big gain.
And you see some of the volatility. I'm chuckling because I think you guys know where I'm going. Perhaps maybe Shonali in the bond market as well. Caroline was nice enough to point out that there was actually a decent 20-year bond auction today. I'm taking a look at the twos as well. If you're up again, just about 3 basis points on the day, but it's 66 basis points. And this is as we're really thinking about a Federal Reserve. Some are saying March is a live meeting. We heard from Christina Hooper, I think, of Invesco earlier, at least here on TV, saying maybe not March, maybe a little bit later. But these are those Federal Reserve dynamics that the market is trying to price through.
I think of Liz Young over at SoFi, where all she wants for Christmas is a steeper yield curve. You know, every banker in the world wants just that, too.
I got some other wishes from Santa, I gotta say, but
not just a steep yield curve.
No, not just.
Are you sure? Signet jewelry?
Yeah, that too. Just Signet. No, we've got to go higher than that. Meanwhile, S&P 500 goes higher, 81 points higher to be exact. 4,649 is where we trade, 1.8% higher, having its best day since December the 7th. We see NASDAQ up 2.4%, 358 points higher. The Dow, 560 points higher, 1.6%. So much ringing of that bell, masks on over at the New York Stock Exchange. As we then pull out to see what the Russell 2000 did. I mean, outperformer, your small caps. Once again, it's this on again, off again, reopening trade. Have we overbought it? Have we oversold it? Well, today we get back into the cyclicals. Best day for the Russell 2000, Carol, since July the 20th.
And what's really interesting, you know, Caroline, we saw that in the last few minutes of trading. We saw the equity market really move up to its highs of the session. So we're finishing the day with those major index averages. You just laid them out there, really finishing at their best levels of the day. One other metric I want to layer on top of it, you take a look at the S&P 500, 427 names in that index higher today, 78 lower. So no doubt about it that there was certainly that risk on trade today, guys.
Shonali, show us what's going on with some of the sectors.
Yeah, absolutely. You certainly have a lot going on here in terms of a lot of movement in the consumer sectors in particular. You see up here a 4% rise in the consumer durables. That is a lot of Nike in there, plus its peers all rising on the day. You do have a few red on the day still. Pharma, biotech, life sciences down less than 1%. Utilities down less than 1%. But again, as Carol had mentioned, mostly green on the screen. Semis also a big gainer on the day.
All right, let's go through some of the specific gainers, and Shonali really setting me up really well for that. Those chip names, once again, really a standout, and they should send a thank you card to Micron Technology. MU up pretty much at its best levels of the session by the close, 10.5% higher here. The company coming out and forecasting its second quarter sales, beating analyst estimates. Analysts were really positive on the results and outlook. Summit and B of A upgrading the stock, and that really lifted the whole group, whether it was NVIDIA, AMD, or Intel. You really saw a move into those semi names. Want to mention Citrix Systems. This stock was top in the S&P 500, up 13.6%. Elliott Investment and Vista Equity Partners considering a joint bid for this company. It's a software maker, according to those in the know. Keep in mind that you might remember Bloomberg back in September came out saying that they have been exploring some options. So that name was definitely in play today. And then Team, number one in the NASDAQ 100 today. That stock was up almost 11%, 380 and change. This is after Bard named the enterprise software company a top large cap pick for 2022. So you saw investors certainly moving into that. That's a look at your gainers. For a look at decliners, Katie, what do you got?
Well, we go straight from the biggest winner to the biggest loser in the S&P 500. That is General Mills. Company reported this morning it missed on EPS, and analysts really zeroed in on the fact that the miss was driven by higher than expected costs that weighed on margins. that weighed on shares. General Mills, rather, closing about 4% lower. We also have Kellogg falling today. And this is after the union that represents about 1,400 of Kellogg's cereal plant workers. They voted to ratify the agreement that they reached with the company last week that effectively ends the strike that started all the way back in October. And so this deal, it includes cost of living raises, health benefits for workers. It's really seen as a big win for labor overall. Maybe a cost to Kellogg, though. You had the stock down about 2.7%. And I want to end on Pfizer. This one is a little bit unintuitive. You absolutely saw the stock wipe out yesterday's gain, even though we had a Bloomberg News exclusive that the FDA is expected to authorize its COVID pills along with Merck's. That news did boost Pfizer's off its lows, but still closing down about 3.4%.
Profit taking, maybe? Let's have a look. I mean, this gyrations on a day-to-day, the decision as to whether you're risk off or risk on. I mean, today we had Credit Suisse once again saying that we're downgrading our outlook for stocks. We're worried. But the mood was very much the complete reversal of yesterday's. If we're looking at FX, yesterday I was telling you how it was the commodity-related FX pairs that were doing poorly. The New Zealand dollar was one of the worst performers. Today, it's the star performer, up 0.8%. We saw the Norwegian krone do well, up more than a percentage point. Why? Because it's about a story of commodities strength. The bounce back in oil yesterday, it sold off significantly more than 3%. Today we see Brent crude up 3.8%. $74 is where we traded. WTI up at $71. What's also, though, pushing so much higher is, of course, gas prices. Over in Europe, a key story we've got to keep our eye on, the cost of gas, what that means for the economy in Europe as Russia just pushing back, not letting that supply run over into Germany. Bid for metals as China looks like it's ramping up its stimulus. And bonds, just worldwide, Taylor, we saw yields spike significantly in Europe. Swiss bonds, for example, again, not needing that haven trade.
Yeah, and that's a similar story here in the U.S., Caroline. I'm really taking a look at across the curves, the 2s, 5s, 10s, maybe even the 20s after the auction, and of course the 30s. And it is a yield higher kind of day, bond price lower. What is so interesting, though, you guys, and I think that, Carol, this really folds into the story, is it's range bound. I mean, we're only going back up to the highest levels that we haven't seen since, what, December 8th, December 10th. And so I think this really speaks to some of the cues that maybe the equity markets are taking from the bond market, really tight credit spreads, really showing that you're not quite seeing the jitters there that maybe we see on the day-to-day basis within the equity markets.
Well, and you have, market watchers like an Art Hogan, chief market strategist at National Securities, saying, the Omicron's potential damage to economic activity will be relatively short and shallow. And this, folks, right, is what the big conversation is. Like, it's safe to say that over the last couple of days, a little worrisome as those Omicron numbers ticked higher. But then again, we know how to deal with it, and we know how to shut down. Maybe if we do it faster and sooner, that the impact will be less.
But it's actually really split, isn't it? You heard President Biden himself citing the Goldman Sachs downgrade of yesterday, talking about how growth will not be as strong in 2022. That's largely because of Build Back Better. But today, Credit Suisse downgrading their overall view and going, no, not overweight stocks. They bring it back to a neutral because they think that there's going to have to be lockdowns in continental Europe that we're already seeing in Netherlands, for example, and here in the USA, Shonali.
Yeah, it's a very interesting question. And of course, at that White House press conference, a lot of tense questions from reporters about why there wasn't more testing more available in the U.S. already.
Yeah, you definitely saw a lot of questions from the press corps on that topic, specifically the testing. But I'm really curious to see what this does to supply chains because, okay, perhaps Omicron, the illness isn't as severe, but you have to think it's going to change behavior, what that means for supply chains already under pressure, what that means for inflation. I think that's going to be a big topic next year. And
it's global supply chains, right? So what happens if the cases spike in some emerging markets or elsewhere, maybe where there's workers, where there's production made of all those things that we all are buying? What's the economic impact of that if that slows down? And that's something we need to consider.
And that big economic impact, we noticed it just in shares of Boeing today, right? UPS ordering, 19 more freights because they're like, okay, the oceans are a little clogged. Let's just do the air freight. There seems to be less traffic up there. So really starting to see some of these structural changes, Carol, that really come from this.
All right, folks. And we say this as we look at the S&P is up almost 24% this year, and the NASDAQ 100, we're looking at a 24% gain as well. So with this crazy backdrop, nonetheless, we've seen some pretty significant gains. All right, that's going to do it for our Beyond the Bell coverage, our cross-market platform, cross-platform coverage. Boy, it's a tricky Tuesday, guys. It's really my Monday, so I'm working this out here. Anyway, thank you so much.
Almost near the end of the week, Carol.
Our cross-platform coverage on radio, on TV, and YouTube. Join us again, same time, same place, tomorrow.